Good morning, everyone. Mike and Corey are here today. Big topic. I'm sure a lot of you know already, if you've even looked at the financial news, that Bitcoin has crossed over $100,000. Finally, it almost did it 2 weeks ago, but it finally did earlier today. So very exciting news. And actually did last night, for those of us that watch it all through the night. No, I'm just kidding. But other topics we're going to talk about. I'm going to talk a little bit about why Bitcoin had that latest surge that pushed it over 100,000 and what Powell said about that. And then I'm going to talk about another a sign of the economy, Southwest and American raising outlooks and what that means to us. And then Corey's going to dive into sector rotation. You may, I'm sure most of you know that we're very heavy tech information, different companies in that realm, but there's other sectors out there, believe it or not. Corey's going to talk about a little bit about how those rotations might occur. So with that, I will remind you, this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So let me share my screen here. And I will take you to the Bitcoin chart. Right now, it's just over $102,000. I think it's went as high as 103. I'm going to show you here. I'll just show you real quick. Here's your one-day chart. It's touched 103.5. But let's back up a little bit because that's more fun to look at. So here is a year-to-date chart of Bitcoin. So back in the early days, at the beginning of the year, it seems like a long time ago, Bitcoin was trading around 46, 40. I think it went as low as maybe 42 when the ETFs came out in the middle of January. And that's when a lot of you saw like a BTIB or some possibly in your models, certainly on the more aggressive side. And it went up initially and then it traded flat for, it felt like forever. For those of us that track it every day, it did feel like a long time that it was trading flat. Meanwhile, and this will feed into what Corey was saying, like in July, we saw the tech companies really peak up. So when you see in July them go way up and a Bitcoin trades flat, it feels like, oh, why are we in this? It's just trading so level. Is what I would consider. And then finally, with the election and the promise of having a SEC lead who is going to be crypto friendly, we see it finally peak out. Well, what prompted this yesterday was Fed Chief Jerome Powell, that leads our Federal Reserve, came out, and it's a great comment here. Bitcoin is not a competitor for the dollar. It's really a competitor for gold, which, he's basically saying he's giving it some legitimacy, which, a lot of people might be sitting there going, whoa, wait a second. If the head of the SEC, if the head of the Federal Reserve, I should say, is saying this, wow, I better really check this out. And it is interesting. I'm going to highlight this comment. This is what he said. Or actually, we'll even get the beginning. People use Bitcoin as a speculative asset. So I don't know if that makes it sound like gold, but then he says it's just like gold, only it's virtual, it's digital. I totally get that side of it. But then he comes back and says they're not using it as a form of payment or as a store of value. I would argue that some people are using it as a store of value. That really is what gold is. It's highly volatile, which is definitely true. Not a competitor for the dollar. It's really a competitor for gold. So, kind of mixed in that, but at least he's recognizing it. It is a speculative asset. We certainly agree with that. We're buying it because we're not just buying gold to hold it, as a store of value, but we're also looking at a Bitcoin because we do believe it will continue to go up. So anyways, jumped up over 103,000. So exciting news. We'll continue to see where that goes. I know that original projections, some people had said, not me, but some people, higher level than me, they said, it would be at 100,000 by the end of this year and 200 by the end of next year. I hope we, by seeing it hit 100 by the end of this year, yay, if it stays over that, we'll continue to see this rise. There will always be buying opportunities. I mean, any asset, especially a volatile one that goes up and down, there's times to buy when it's on sale, and we certainly will look for those. So it's not too late to get involved. Of course, you could look back and say, I wish I'd have bought it a year ago. Yeah, of course. I mean, hindsight's 2020 on that, but there's certainly an opportunity going forward. The other article I saw that was very, to me, very positive. This is not that I would run out and invest in airlines, but Southwest and American raised their sales outlooks. So when they raise their outlooks, and we've covered airline stocks in the past, they have typically not done very well certainly over the long term. In the short term, they may have jumps, but when I see things like this, I say, wow, that's good news. Travel's going to be going on. The consumer's going to spend, business spending. This is why airlines sales would be going up. Both stocks are up a little bit today. I don't read this as, oh, I'm going to run out and buy in Southwest or American, but I do read it as that's good news for a sign of the consumer. So with that, I will turn it over to Corey, and he can talk about sector rotation.
Yeah, and that's one of the most sensitive parts of the economy. It's one of the last ones to thrive and one of the first ones to slip. So seeing them in a good place, and I think the record day of airline travel in the United States, like all of history, was last Friday.
I thought it was last Sunday, but
yeah, I think I'm sure you're right, but yeah, 3.1 million people or so. So yeah, that's a pretty staggering number. Okay, the S&P 500. I just wanted to show you. So here we've got a 1-year chart. Of course, we're at all-time highs. Actually, all-time highs today. Hit a new all-time high today. And what's really going on there? How does that happen? We're in a raging bull market, they say. And you might hear, if you read and listen to the things Mike and I do, you might end up hearing a statement that sector rotation is the lifeblood of a bull market. So what does that mean? That's what I want to hit on. Well, here we've got different sectors that are in that S&P 500. You've got the energy sector. Well, is the energy sector in a raging bull market? No. It did really well from January to April, but hasn't done anything since April. Are S&P 500 materials in a raging bull market? Not really. They're pretty much flat since April. Industrials have been strong all year, a little flat throughout that summertime, but strong all year. Consumer discretionary, and that's kind of getting more towards those airlines that Mike was mentioning. Those were flat for the spring, but really strong in the fall. Consumer staples, stronger in the spring, flatter throughout the fall. So I just wanted to show you that. Oh, and then of course, this is an interesting one. Healthcare had a distinct peak there in September, and maybe some of the election fallout, maybe a little bit of the RFK Jr. stuff, but healthcare has not performed well in the fall. So just looking under the surface a little bit, you might be wondering, well, what's next? Where could we see further strength? We're actually seeing in tech peaked in July, and it just got back to that peak. We've seen Apple, Amazon, and
NVIDIA.
NVIDIA. Well, which one's hit an all-time high this week? Meta, Apple, Amazon, I think. Tesla's
NVIDIA's
getting
not quite
close to an all-time high. What else? Google is about 10% away, a little less than 10% away. So we might actually see that sector return to strength here. And what would that mean for the market? Well, it'd mean further all-time highs. And look at the financials here, Mike. Man, just all year long with the big bump when there was, going to be the thesis of less regulation coming into play. So just interesting there. I don't quite think we're done with this bull market.
Yeah, and I guess when I think of those different charts you just showed, and you see healthcare as being kind of, I don't even know, it looks like it might even be down in the last 6 months or whatever. But
yeah,
when I think of everything else, you want to spend on it. You want to get the latest computer, latest phone, great AI. You want to travel. Healthcare is very interesting to me in that I have a background in healthcare, but you don't really want to spend money on healthcare, right? It's like
Right.
the goal is to stay healthy and not spend money on healthcare. You want to be at a healthy weight and not spend money on the GL1 drugs. You know, I mean, it's very interesting. Plus, the other side that healthcare gets impacted by too is it's a lot of it is either employer insurance funded or government insurance funded, and therefore they don't want to spend money on it either. So I don't know. There's certainly opportunities within healthcare, but they're much harder to find because you need to find where it's going to grow. And, you know, certainly companies like Eli Lilly have done fantastic this year. So thank you for sharing that. And that's one of the things that we do is, you know, look at the different sectors where money's going, invest accordingly, certainly go overweight in certain sectors where we think the biggest benefit is for your investment. So with that, we'll see, you know, Bitcoin, maybe it'll be at 200,000 by next week. I don't know, probably not. I just would like to see it hold the 100 level for a little bit, give some opportunity for some people to invest in it before it takes its next spike up. And with that, I will we'll say goodbye for now. Have a good one, everyone.